Right, because I'm doing an update on what we did today. There was kind of a lot going on, so a lot of big picture global macro moves. I think we want to talk about the big one I really want to hit on was oil. Obviously, that's trending today down. One point it was down 6% intraday. So I just wanted to talk about what we did in the live room. There was a good little lesson in there about how we nibbled long and then actually stopped and flipped and went short, and it pays to flip and go short. There's a couple of ways you do that. I don't know if we can get into the how you work your size when we do that. Today it was just pretty clear cuts. It was just simple flip. But I'll show you kind of what I did with my options and how to play that. But let's just hit big picture, global macro. I like to start with the dollar. If we get that right, we tend to get a lot of other markets right. And it hasn't done a whole lot. I mean, it's been a steady grind higher longer term. We've been highlighting that for a while. So we've been bullish, dollar bullish for a while. And not a lot of angle and distance, not a lot of momentum, but still in a bull market. And you can see the monthly cycle still has room to move higher. A weekly cycle may or may not turn up here after it's kind of moved down around the 60 area. And then the daily, though, a couple things to talk about. This daily cycle we've highlighted for months, how it's done a really good job. So good ebb and flow here. And then most recently we added back to euro shorts, which is the opposite, right, of being long dollar index. And but here today we had a hard time at 98 and a quarter again, put in a topping tail and reversed along with the daily cycle. So this has been a pretty crowded trade. If you look at the futures and options positioning, I don't have the template on it for this week, but it's actually pretty crowded with the CFTC data out of Chicago. And so what that means is that when you get positioning all on the one side of the boat, it's easy to reverse. So everyone's short euros and long dollars, and it just puts up a red flag that maybe that can reverse. I mean, the crowd can be right, but it's something, just another thing to be aware of. So when we were up at 112, 113, that was the top of the risk range. As we move back towards 111, we need to be covering short. So the fact that we held there again today, and then there's a bottoming tail with the cycle. I haven't covered my last course shorts on that, but we talked about on our team in the live room that we want to be wary that if we close above the 8, you may want to cut that loose. And then we're playing euro yen on the other side of that. I guess we should talk about the yen today before I hit on oil. Let's just stay with currencies real fast. All right, well, so euro yen we're playing along, and it's been trending lower with the euro as well as the yen's been really strong. So it's out of the money, but I'm really kind of watching this 122 area is where our risk is. The bottoming tail yesterday I thought was pretty constructive, but even with the euro rallying this afternoon, it really didn't budge just because how strong the yen is. So one way to hedge that is actually come in here and be long yen futures. And I sent out, I think, a tweet this morning. I said, if you get through this, I'm watching the top of this risk range. If you get through there, I think it makes sense to add. I mean, the yen just exploded today. It has a lot to do with, obviously, equity markets globally under pressure again. What S&Ps did today, it's all the same trade. The VIX ripped. The VIX was up, last I looked, 22%. After making a higher low. So this has been a very good trade for us too. We like being long, 13 handle, 12 handle, and then as we rallied up, we're reducing that position, taking off calls. And then we started putting it back on last week. And so I have that position today, took some profits on those calls. But you can see that the volatility coming back. Yen is a safe haven play. The yen ripped today. So I added futures here just to hedge that euro yen long. It's not heavy, but I think even if we pull back now, this looks pretty bullish. I'll just touch on equities. We've been eyeing this consolidation. And when you're in a triangulation or a wedge, you never really know which way you're going to break. But today it was pretty obvious, right? So you can see it a little bit easier on the intermediate term. I don't draw these trend lines like a real anal viewpoint. I treat them as areas. But it's pretty clear we started to make lower lows when we came in this morning. There's lower highs, right, all along our pie line. That's the top of the channel. So we talked about the risk is to the downside in equities, and I want to stay with that. So I came in today long the VIX, short the Russell, covered the Russell, and I told my guys I don't want to buy this in front of 2,800. This is the zone we thought we'd test, but I'm really not interested being long, and the reason being is because when you come out of a triangulation like this, with this strong of a candle, it's really, you should expect more follow through, especially when you have a cycle that notice that it's only around the 50 area. We like to follow the slower line. So I think you're going to see more follow through. The 200 is going to be a lot on a lot of traders' radar. I'm actually wondering if I'm bearish enough. And I thought about at lunch maybe I should buy these like 27.75 puts, or if you're trading the SPY, I guess it would be 277. The ETF. I think you're going to get it. I think we're going to get the test here. I think we'll test our pie line. I think that's going to be a pretty major test for the bulls, and whether this equity market cracks and we start to move into more of the same type of setup where we had growth slowing and inflation rolling over that we had into the fourth quarter of last year. All right, and so why I say that, if you actually look at oil was the first to rebound off the lows after the bloodbath we had into the end of the year. We covered a lot of our shorts the 24th, right before Christmas. And oil was the first to kind of rally, and that's been one of the best places to be all year. And that trade obviously started to unwind today. I think that's why you obviously had a pretty strong down day, just a lot of technical selling, a lot of positioning coming out of what's worked so well. But when you have growth slowing and a Fed that basically crapped their pants at the end of the year and then pivoted dovish, that's good for energy, but that's kind of played its way out now. And if energy is going to be the first, and oil is specifically the first to roll over, well, the lower the energy goes, the lower oil goes, the less inflation you're going to have, and you're going to move back into this setup where treasuries do well, dollar does well, tech gets actually clobbered. That was one of the worst spots to be this month. So there's not a lot of things to buy when you have inflation rolling over and growth slowing. So we'll have to see. The dollar, the dollar's kind of did the opposite today with really a big risk-off move. So anyway, so what we did here on oil, and then I'll just wrap it up, but we were watching 60, pretty oversold into 60. We took a day trade long here, I guess it was yesterday, the day before. That didn't hold pie. I'll show you in a second. I just stopped out of that and then waited. So been playing a small core long on oil from this last bounce in the early part of May. Took most of it off into the 63, the top of the range. And then had a small call spread. So that was like my core long if we continue to trade up into 64, 65. But as we pulled back, that was right here. This was the signal we had the other day. That was a day trade. Gave it a shot. I think it was a 30-minute. Where the pie line was? Yeah, right here. So we were going to see here if we could hold pie the other day, and we couldn't. And you see this big strong candle right here, and just cut that long. All right, and just stayed long like that tiny. I cut my futures loose, just some options on the upside. And then today I took another shot on the long side this morning, and then that broke down. Didn't even mess around with it. And what I did, show you what I did was that call spread I had, I kept the short side of the call spread, and I got rid of my upside call. So I think I was long, let me look at it. So guys, this is what our live trading room looks like. So we brought in our old chat room, our push alerts. We would do in like a River style or a Slack type of room. We were using Zoom to do our live room. Now it's all under one umbrella. We have a mobile app that will push out alerts to your phone or iPad or desktop. And so here you can see all the alerts we've been doing most recently. There's the VIX, Euro. This is what we're doing on the Russell covering 10s. What else did we do here? There's a lot of trades here, guys. This is only $100 a month now. It's an entire membership. $100 a month. It's all our real-time alerts, your live room analysis. And I'll put the link in the video, in this YouTube video. I'll also put a link at the top of our website too. It's jenkinsrm.com. I'll put a new menu link there to make it easy for you guys to. You can come in and do a trial for a week, and it's not a huge investment. So I'll let you in for a week. After that, I mean you guys pay $500 to be in good trading rooms, so $100, and we're doing half a dozen timely signals across all markets. This is not just trading S&Ps. I mean, global macro guys and gals. But this is okay. So here, good. I got my Epic pen still open. So if you look, so I was down on the day after buying and then breaking 60, and I flipped and went short, and this is how we finished on the day. So this was my short leg. Notice -1. All right, that was from part of my core long that I had for a couple of weeks now. But then I was also long 60 calls. So I think I was doing a call ratio spread where it's hard to see on the white. Where I was buying, I can't really explain this, but this is what we teach in our options course. And so I'm long 2 times the amount of 60 calls, and I'm only short 159 strike. So I stopped out on those. So you can see I lost today on that, right? But then I kept these short calls because I'm bearish once we broke 60, right? The market starts to crack, boom. So we stopped and flipped. And then what I went ahead and did, now this 64 call was part of my core position from last month. So there was plenty of profit taken in futures. But this only had, I didn't stop out on this one because it only had it's only worth like $300. So there's for me, it's like whatever. I'd rather have it'll help me with my buying power instead of me being naked short. So I just left it. It was only $300 to lose there. And then this is where I added today a put ratio spread. So I did the reverse of here where I was long 60s and sold 59s. And I turned around and bought the 60 puts. All right, and then sold the 61, the higher strike. So that set me up more short. So that was a pretty good day. I mean, that was a good recovery on that. And then the plan is from here, I'm going to stay short. I'll take some profit if we see 55, which is, I think, pretty doable. 55, 52 is kind of the first target area. And then if we rally up today, I'm going to hit it with futures. If any type of bounce, I'm going to sell into oil now. I'll kind of get one right now. We'll see how we trade into Asia and London. I think that's pretty much it, guys. I would just encourage you, jenkinsrm.com. Come join our room. We're going to be growing this out. I mean, I'm going to cover everything. So if you guys before were in crypto, now that's heating back up, we can trade that together live. We can look at that live. But at the same time, I mean, we're trading treasuries. We've gone 18 for 20 on our treasury calls. All that stuff is posted. I mean, I don't know what that's worth. $100 a month. We've only had 2 times we've had to stop on bonds. And last 2 quarters. This is just all my signals in 10s. This has been one of the best places to be. So all this is signaled in real time. Wherever we see the opportunity, that's what we're trading. All right. So check the link in this video, and then I'll put another link up here on the menu if you guys find this somewhere else in, like, I don't know, the Twitter sphere or something. All right, talk to you guys in the morning.